To build anything that truly lasts, it takes time.
Hello and welcome. You're watching Your Trades with me, Mansi Dave and Kavita Thaplyal. And Tuesday's session felt really good because after a lot of consolidation, quite many sessions of downtrends, we did see good green pattern across the benchmarks and in the broader markets. It was shining everywhere. The stock-specific, sector-specific approaches too were good. And Kavita, terrific Tuesday. Nifty did close about 25,200.
Absolutely. You know, we saw Sensex rising almost 300 points and Nifty above 25,150. I mean, after 4 sessions of volatility, finally we saw the bulls taking over the market. You know, auto led the sectoral gain for today, rising almost 1.3%, followed by pharma, FMCG. You know, only Nifty metal was slipped marginally, but otherwise we've seen most of the indices trading in green and also reflecting a broad-based optimism across the sectors. Even the broader market was in action today, you know, supporting the major indices. And look at the top gainers, you know, the Nifty top gainers at the close. Hero Moto keeping the momentum up, closing almost 4.7% up. Bajaj Auto almost 2.5%. Sun Pharma, Shriram Finance, Apollo Hospital, such counters, you know, ranging from 1.5% to 2.5% up. In terms of losers, definitely dominated by the IT pack, HCL Tech almost 3.3% down, Eternal, SBI Life, HDFC Life, Tata Steel and Kotak Bank ranging, you know, down almost 0.5% to 1.5%. Overall, the market breadth at the close was fantastic. Again, 1859 advances and 906 decline. So, Mansi, we can say that a day of bulls and definitely a terrific Tuesday, but then I'm sure you have a lot that's making headlines for today.
Yeah. The thing is, it really felt good while the markets were performing during the session today because there are a lot of downtrends and confusions and directionless phases which the markets has seen. But quickly, let's take a look at what made headlines during the day today. Of course, it was a terrific Tuesday where all the benchmarks and the markets overall were performing really good, but stock-specific, sector-specific approaches to the markets also were really nice. Pharma sector was doing the rounds, and in particular, Sun Pharma did gain on the dispute settlement. There was a news flow which was helping Sun Pharma during the session. All the pharma spaces, in fact, pharma, healthcare, diagnostic, CRAM, CDMO, the sub-segments of pharma were also doing well, but Sun Pharma on the back of news. Tejas Network did slump on weak Q1. The earnings were weak, and on the basis of which the stock was performing with downward trend. HDFC, ANC, CAMS, and BSE Limited. It was a day for the exchange ancillary stocks wherein we did see the platform stocks also jumping during the trades. Bullish signals coming in, and of course brokerage positive reports were also taking the take during the session for all of these stocks. At the same time, we did keep an eye on Deepak Fertilizer also. The fertilizer play was doing really good, but in particular because of the 1,200 crore deal with Petronet LNG with Deepak Fertilizer has signed was the news flow which was helping Deepak Fertilizer during the trade today, and it was really doing good. And the seasonality factor, of course, is working well for the agri-related counters, fertilizers, chemicals, basket consumption, and of course the tractor spaces as well. Auto sector was doing good as well. Tesla did enter India. We did see the opening of the showroom, the debut in Mumbai, BKC, and at the same time auto ancillary were doing really well. With the entry of Tesla, there are a lot of news flows which will come in, a lot of researches which we will keep pulling in during the sessions moving ahead. But yes, Tesla did enter Indian market with its first showroom debut in the Mumbai BKC area. External Affairs Ministry did seek de-escalation with China. Successful, which is another news which was in focus, and one news which is pride for India is the successful splashdown of Shubhanshu. Shubhanshu's homecoming was another news in itself which is making really happiness, and the Tuesday was really becoming happy after the splashdown. They call it the splashdown, and that is what the news which made sense and a lot of pride for India. It was a happy moment altogether. But moving ahead and talking about the technicals of the market and helping you navigate through what you should do tomorrow, we have Ajit Mishra, SVP Research Strategy Broking with us. Ajit, good afternoon. Thank you so much for giving your time to ET Now. Tell us what is the sector-specific and index-wise approach which you see for the markets from here on, because today was a good session altogether.
Yeah, good afternoon, Mansi. Good afternoon, Kavita. So yes, indeed, it was much needed breather. Means after 4 days of successive decline, bulls were completely on the back foot. Means we've slipped below the short-term averages. We were really under pressure across sectors, barring the banking. And today, the rate sensitives basically helped the index to regain some of the strength. But it's too early to say whether we are out of woods or not, because we are still trading below the 20 EMA, which is around 25 to 50 area. So I believe that 25 to 50 to 300 would be the zone where Nifty might continue to face resistance in the coming session. So that is something that bull should be be wary of and maintain a strict close eye on this particular level for any attempt of further recovery or rebound. At the same time, the good part is banking and like the other rate sensitive like auto. On stock specific front, there's ample of opportunity across the board. So the focus should be more on stock specific opportunity instead of index until we decisively reclaim the 20 EMA and hold over the same as well.
So, having said that, Ajit, what's going to be your pick if there are stock specific opportunities in the market?
Right. So see, one space which is buzzing now after long underperformance, that is FMCG, and Marico within this space has been outperforming for quite some time. The stock is currently quoting at the record highs. We've seen a decent consolidation of late, and the stock is set for the next leg of the up move. So around 770 is what we are eyeing the stock to test. So with stop at 725, one can accumulate Marico at current levels. And the other stock from the banking financial basket, Shriram Finance. So after almost a month-long consolidation, we are seeing an attempt of decisive recovery after retesting in Shriram Finance. So with stop at 665, one can accumulate Shriram Finance also at current levels.
From Ajit Mishra, both the buy call strategy for Shriram Finance as well as Marico. But for indexes, are we out of the woods is a question. We'll get an answer in the coming sessions. Ajit, thank you so much for your take and giving your views on the markets, both index as well as stock specific. Thank you so much. Moving ahead, let's go across to Shrishti and understand what are the technical charts and the breakout or the breakdown candidates. So Shrishti, hi, good afternoon. Looking at the markets faring today, I'm sure we have all the breakout stocks.
Well, indeed, two breakout counters, and first up is actually the top gainer of Nifty 50. Here we are to highlight what sort of a pattern that Hero MotoCorp is seen to be making, because of late the stock has been a key underperformer, and we all know about the reasons, the kind of underperformance, especially in the entry two-wheeler space, the stock has been witnessing with subdued volumes as well. But today the stock was all excited, almost a 4 to 5% jump in today's trading session. And not just that, look at the move today. The stock has been consolidating, or rather facing a rejection around that 4400 odd levels. But today, a strong move. The stock managed to break past that resistance level for itself and took a bounce exactly from its 20-day moving average and closed at the day's highest point as well. So this is the first stock that we wish to highlight on the breakout side. But moving on to the next counter, that too is also a breakout stock, wherein Shobha Limited, that's the stock within the realty pack. A very strong move that we have seen, more than 6% jump on this counter. And this was the second straight day of buying happening after the bullish engulfing pattern the stock did made in just the previous candle. It's a falling trend line breakout for Shobha Limited, a 6% higher, and now trading above its key moving averages as well. And hence, we wish to highlight this as the second breakout stock. So these are the two stocks. Back to you.
All right, Srishti, thank you so much for that update. But then moving on, Shreyas Savalkar, head of Equity Access Mutual Fund, shares his top sectoral picks. He likes manufacturing and Make in India theme. Let's listen into his rationale behind it.
The Make in India, where we are trying to build in and try to reduce the import dependence. So it can be in solar. It is actually in multiple parts and subparts of even consumer durable. The government has taken multiple steps into that, and that part is also growing very well. That is obviously the part of manufacturing. So such stories are really emerging very nicely, and there obviously, as you are highlighting, the valuations definitely remain high. But So these stories are obviously in capital goods, power sector, capex, as I highlighted, EMS and import substitution wherever we are driving. On the other hand, in consumption, they are in tourism, travel, and retail. Some of the retail stories are actually doing extremely well. So these are the segments which continue to do well, where obviously the valuations are high. We need to bear with it. As long as the growth delivery remains, the valuation may sustain. There are pockets where valuations are not that high, and there is expectation of revival, and that's where one of the aspects on the credit and the lower interest rate. If you see the private sector banks valuation compared to pre-COVID, that part has not got re-rated. Actually, in some cases, there is a de-rating also.
Macro tailwinds which are going to help the markets is what the word from the wise coming in. Moving ahead, Sun Pharma has announced that it has settled a patent litigation with US biopharma MNC Incyte for an upfront payment over and above an ongoing royalty, preparing to launch the Leqselvi drug in the US. Now, this drug is used to treat severe alopecia areata, which is an autoimmune disease that leads to hair loss and baldness. Shrishti is here with all the details. Shrishti, over to you.
Well, that's expected to be positive for Sun Pharma because they finally announced the launch of Leqselvi. That is one of their key specialty products in the US market. And this is indeed expected to be a big one. Why so? Because analysts are expecting that in the times ahead, it could actually be the second highest specialty product for Sun Pharma just after Ilumya. But let's first tell you what is this drug is all about. So Leqselvi is actually a drug which is used to treat alopecia, which is a hair loss disease. And in the US, it's expected that almost 70,000 people do get treatment because of this, and they have this particular disease, and hence the market size is actually very big. And the other big announcement for Sun Pharma is actually that this particular drug was actually under patent with another pharma company, and now there is the settlement of this particular dispute is already through. So post the settlement, the Sun Pharma has announced that they will be launching this particular drug in the US markets. And not just that, in terms of the exact amount with respect to the settlement with the other pharma company, that is Incyte Pharma, that is not disclosed as of now, but analysts are anyways expecting it is going to be a big opportunity for Sun Pharma, wherein as per Elara, they are estimating that this product can actually become $200 million to $300 million opportunity for Sun Pharma in the next 3 to 5 years, which in rupee term can translate into 1670 to 2510 crores. In that range, the contribution can come in from this particular drug itself, and not just that, it can actually become the second largest product for Sun Pharma just after Ilumya.
Right, so that was the stock of the day. Thank you so much, Shrishti. But then moving on, let's get connected with our other colleague, Rabinder, who's got all the stocks in news action with us.
Well, as on back of weak Q1 FY26 earning, Tejas Network is in focus, where company has reported the Q1 FY26 number, and company reported revenue at rupees 202 crore, which was down by 87% on a year-on-year basis, and company reported net loss at 194 crore as compared to a profit of 77 crore year-on-year basis. Moving to next, Rallis India is also in focus on the back of Q1 earning, where company has reported a good set of number in Q1, and company reported revenue at 957 crore as compared to 430 crore on a sequential basis, and company reported PAT at rupees 95 crore as compared to loss of 32 crore on the last quarter. Apart from this, Bank of Maharashtra is also in focus on back of earning, where company bank reported NII at rupees 3,292 crore with an uptick of 17.5% on a year-on-year basis, and PPOP also rose by 12% on a year-on-year basis. Moving to next, Yes Bank is also in focus, where as per agencies, SMFG is considering making an additional $1.1 billion investment in the Yes Bank, and SMFG is seeking to acquire about 5% of the Yes Bank shares from the US investment fund Carlyle Group and the other minority shareholders. Apart from this, SMFG may also buy out $680 million in the convertible bond issued by the bank to help the boost the growth. Apart from this, HDFC MC is also in focus on the back of brokerage note, where Nomura has come out with a note, and they have maintained the buy rating with target price rupees 5,500. And lastly, CAMS is also in the focus on the back of their brokerage note, where Motilal Oswal has come out with a note, and they have maintained their buy rating with target price rupees 5,000. So back of this brokerage note, CAMS is also in focus.
Okay, thanks for that update, Ravinder. So those are all the stocks and news doing the rounds on the exchanges today. Moving ahead, after zooming for about the last 3 trading sessions, Ola Electric is ailing in trade. It was ailing in trade today. We have both Shrishti and Varun on standby, and they are giving us the bull and the bear case scenarios for the stock. Let's understand which one wins, the bull or the bear for Ola Electric.
Well, indeed, the latest trigger that is coming in for Ola Electric is actually the earnings. And where in Varun, once again a disappointment coming in, but specifically when we talk about the numbers, once again a loss is what the company has reported, and over 400 crores.
Definitely, the company might have reported loss, but if you look at the guidance of the company, that is very good. The company has said that it would deliver around 3.25 to 3.75 lakh unit vehicle sales in this financial year. Also, the company has said that the revenues would be 4,200 to 4,700 crores, and it is looking to become EBITDA positive in FY26. I think so that is a very positive sign for the company.
Indeed, very big promises made, Varun, but other than that, take a look at what the loss in the market share has been, which is now sub that 20% mark as well, once a leader.
Though the company is not a leader, but it is still in the top 3 in the EV vehicle space. And if you look, the overall market share still stands at around 19%. And the number 1 player, that is TVS, has a market share of around 24%. So the gap is not much, and it would be, time would tell the company could again be a market leader.
But time has told that what a wealth destroyer Ola Electric has been post the listing, because from those all-time high levels, the stock is already down 70%.
But yes, the company is working on bringing on new technologies, especially the Generation 3 technology that the company is bringing. That might turn out to be very positive for the company going ahead.
But indeed, the counter here is that it's still not able to gain the confidence of select brokerages, because it's Kotak which continues to maintain its sell call with a target price of just 30 rupees, and Ambit as well has a sell call with a target of 40 rupees, Varun.
But there are some good brokerage houses. There are big brokerage houses who have a target of 63 to 55 rupees. Goldman has a target of 63 rupees, and Citi also has a target of 55 rupees. That's a good substantial upside from the current market price.
Indeed, the street seems to be divided when it comes to Ola Electric, but here it is, the bull versus bear scenario for the stock as the company as well.
All right, a complete scenario on Ola Electric, but then let's talk about Tech Mahindra. Tech Mahindra is all set to announce its Q1 earnings, and let's go across to Pulkit to get us more detail on what's the street penciling in.
After TCS and HCL Tech, now it's time for Tech Mahindra. So expectations are very different from what TCS and HCL Tech had. So if we talk about revenue in USD terms, we are expecting to be up around 0.6%. If we talk about in INR terms, we are expecting to be flat. For EBIT, we are expecting around 3% up, and for EBIT margin, expectations are about 30 basis point in an upside move. For profit after tax, we are expecting around 3% upside, and all are on quarter-on-quarter basis. If we talk about the Q4 particular business-wise expectations, for BFSI, cloud and digital offerings, they are expected to be in a good manner. But when it comes to the telecom part, which is around 35% to 40% for Tech Mahindra revenue, the revenue could be, or the business could be, in a sluggish manner. For pipeline, yes, it is expected to be remain healthy, but when it comes to the revenue conversion for this pipeline, the expectations are not very good for this particular thing. If we talk about margin expectations, for particularly with the help of Project Fortius that the company started last year, we are expecting to increase our margin by some basis points with the help of this. If we talk about the management outlook and what we should focus in the management commentary, so the main commentary would be on the 5G, Gen AI and telecom business recovery, how they are shaping up and what is the demand outlook for these particular things, discretionary spend by clients, headcount and attrition trend inside the company, and the most important thing, that is tariff and geopolitical tensions, how due to this tariff and geopolitical tensions business is shaping up, and what the company is expecting for further FY26.
Well, a lot of factors to keep an eye on, and yes, after TCS and HCL Technologies, it's Tech Mahindra which will be in focus, particularly for the IT segment. The results will come up, and while the results come in, we'll also give you the reviews of the same. But let's move ahead and talk to Shrishti and understand what are the cues and triggers to watch out for tomorrow. Shrishti, over to you. Snehi is with us for the trigger. Snehi, over to you.
Well, there's lots of cues to watch out for. Not much happening back home on the macroeconomic front, but globally you have PPI numbers expected from the US along with their industrial production, and the Fed's beige book will also be released. Along with that, watch out for the inflation print from UK in the form of CPI numbers. In terms of global earnings, you'll have aluminium major Alcoa. Along with that, some big banks coming in from Wall Street like Goldman Sachs, Bank of America, Morgan Stanley that will be reporting their earnings. Back home, you'll have Nifty 50 major tech Mahindra that will be coming out with its numbers, so those IT earnings continue. And other than that, you have Angel One as well as DB Corp that will be coming out with their Q1 FY26 earnings. In terms of corporate action and board meetings, lots is happening tomorrow. First up, watch out for SBI. The private bank is, the public sector bank is going to be mulling fundraising, so watch out for that. Glenmark Pharma Investor Day will be in focus, so watch out for that stock as well. Ashok Leyland will be trading ex-bonus in the ratio 1:1, so that is going to be a stock to watch out for as well. Piramal Pharma and TCS will be trading ex-dividend, and it's going to be the last day to buy shares of Coromandel International to be eligible for interim and special dividend if you want to be eligible for their record date. In terms of other events, some Fed commentary expected tomorrow from New York Fed President John Williams and Richmond Fed President Thomas Barkin. Both of them are set to speak. ECB Governing Council member Francois Villarao de Gallo is also going to be speaking. And from reports, we understand that NVIDIA CEO Jensen Huang is also going to be holding a public briefing in Beijing. So all of this commentary is going to be very important to track. So watch out for all of these cues.
Too many triggers to watch out for. Thanks for all of those updates, Snehi. And with that, we wind up this edition of Your Trades. I'll take your leave, but there's a lot on the other side. So you stay tuned with ET Now.